Ready to go. Good afternoon. This is Ifan from the Strategic Day Trader, and this is your market wrap for February 25th, 2020. Q's down 2.6%, SPY down 2.9. Okay, coming into today, the bias was neutral. If we break above yesterday's high, expect us to rally. Okay, and so basically bullish, and then underneath the lows, bearish. Okay, with the understanding that we are into some support on the daily. Now, this daily support really didn't show up today, right? Wasn't really stepping up, and so we had just all day downtrend in the market. Okay, and so we are getting something very different today than what we got yesterday, despite both days being pretty bearish days and getting continuation on our bearish bias. And like I pointed out yesterday, the interesting thing is that we have had some nice kind of clues into the big moves down that we've gotten. Now, of course, this is a lot bigger than the last one we got. But you can see how last time we got this break of the hourly trend, then we got the gap down. Break of the hourly trend, then the sell setup triggered, we start the bearish bias, and then we got this gap down. It spent yesterday kind of in a range, consolidating, tried to go higher, tried to go lower. You can see for the most part, didn't really trend. And then today we got the follow through as we broke underneath. Okay, so for the most part, shouldn't have been too surprised that once we broke the lows that we got follow through lower. So very deep pullback that we're getting here in the market. Okay, and so what I'm expecting going into tomorrow is that I expect us to rally, but I expect rallies to get sold. Okay, so we're going to have a bearish bias going into tomorrow. Okay, but knowing that after this many bars down, after a trend day like today, that it's not the kind of thing you just want to be shorting just because it makes a new low. Okay, so that's why I wanted to make a point of the difference between yesterday, right, which most of the losses, right, the loss in the market came from the gap itself. Today, we actually gapped up a little bit and then sold off. Okay, you can see this represented as well in the daily bar itself, right, in the Qs and SPY. Neutral bar for the most part. So I use that neutral bar to say, okay, we had some time to kind of digest the gap. If we go above it, I expect us to continue that rally. And then if we break below, continue the bearishness. Okay, and that's what we got. We got the continues the bearishness. So you can see, even though both days, down a good amount, the way in which they got sold is different. The gap versus today's all out, all day downtrend. Okay, so tomorrow, if we get a nice rally, that's a good short opportunity. I wouldn't be surprised if we get another neutral day, some kind of inside day, because of the wide range bar we got today. Okay, what would it take for me to switch to some kind of bearish bias? Probably a big gap up, like negating this bar, that kind of thing. If we negate this bar, that's be pretty bullish. So, but otherwise, neutral to bearish going into tomorrow. And the only reason not all out bearish is because we had follow through and kind of the bearish bias coming to fruition, right? This is the kind of thing where after this, a lot of selling got done today that you expect a pause. Okay, now if this is kind of a sign of things to come, right, and we'll be able to tell pretty soon. You'll see that represented also in the plays that we take. Okay, as we all know, the market is dynamic, and so as traders, we have to be as well. I got a really good question today on the CSOD. Okay, is the CSOD gap too big? And is there such thing as the gap being too big? And the answer is the gap is bigger than you would want it to be. We only really need this thing to gap to 50, and I'm pretty bearish on it, right? That's where support is around this 50 area, gap to 50. But instead, it's gapping far below it. You look at what this does on an average day. It's gapping. I think we looked at it like $7 below. It opened up somewhere around 43. Okay, and on average this thing only has like a $2 range, so it's doing a lot of days worth or gapping far below where the support is. So yes, this gap is a bit excessive, but if we are in a weak market, okay, those gaps are more likely to get sold. Okay, now a couple weeks ago we had this WWE, which also was an oversized gap, and what happened on that day? Got bought. Right, next time it got down, it got bought also. But this is the kind of big gapping too far kind of gap that we can compare it to. Okay, and so when the market is weak, it's more likely that these oversized gaps are going to get sold. Same with gaps to support. As they get to support, you might have played this MIC in the afternoon here, right? Was the idea given here as we came out of lunch to play this base breakdown here was at support. But just like how downtrends are formed, right? Levels of support are continuously getting broken. That's how you're getting lower lows, right, after each lower high. Okay, so you're seeing a lot of that. K2S as well did have some support initially on the gap, and then even after the morning sell-off, got to 16, which closed the gap here that was left behind last May, and even went through the base and continued, right? And so especially when you get these things trending really nicely, they're the kind of things that you want to stick with and be in at the end of the day. You notice that lately. Also, even in the shorts that we were taking, like the TECK that we were in until the final bell, basically, you just had to be out of it because it's just going to close here at the lows, right? That a lot of these are going to be that way. So if you played this MIC, you could still be in it till the end of the day here. I know it's already bounced like 20-30 cents off the lows here, but that's still 70 cents below the entry, which is really nice. And this K2S really was the one. I do regret missing this sell setup here that it had. On the 5-minute, I do have it highlighted here. Nice retracement, nice sell setup off the declining 20 there, right? Nice tight stop. Now, regretfully, right, I was going after this HPQ. And, so when I give, kind of bring your attention to, maybe there was a mistake on my part. HPQ was all right. This was 2350 by 2335. Gave it to the room, took most of it up here, and then the last piece ended up coming all the way back in. And so that was a little bit of flawed focus or bad decision making on my part, because knowing that the market was as weak as it was and that shorts are getting better follow through. I mean, that's no surprise. It's just weak market. Shorts are going to give better follow through. That I shouldn't have been as focused maybe on the HPQ and really stuck with looking for opportunities in this KTOS or even the CSOD continued to work throughout the day. Okay, so now going into tomorrow, we may not necessarily see, and I don't probably not see, all of these really big red bars representing really good short opportunities and follow through to the downside. But in the same way that when the market was grinding higher and was in this all-out uptrend as it was, especially pretty cleanly for the kind of end of last year and beginning of this year, right? A lot of the longs were just on a tear, right? Making new highs, breaking through areas of resistance, right? So it's the kind of thing that, maybe because of that makes me a little bit more comfortable and biased towards looking for things with relative strength. So it's not that, HPQ is a bad play, actually worked pretty nice, but in comparison to what the max potential was, I think it was like 1/3 of what could have been made max on the K2S, or probably even more now as the K2S makes new lows here, right? So, that's the kind of thing that we, given all the tools that we have, right? We can play pro gaps, mega gaps, novice gaps, and all the entry patterns that we have at our disposal, right? Breakouts, pullbacks, and all the variations like 1, 2, 3s and failure patterns, right? Still, right, we have to adjust to what the market is doing what the best opportunities are that are out there, right? And so, of course, even in a bearish market, you're going to take some plays to the downside, some shorts that don't work. But if you can put your focus on the right opportunities, right, you have a better chance of catching, right, the really, really nice ones. Okay, so that's something that we'll keep an eye out here for. Going into tomorrow, bias is still going to be bearish, but we would like to see a pullback first, okay, a retracement. And so it could be that tomorrow we have a slight rally and we don't get, any kind of initiation of the sell setup until Thursday or Friday or something like that, right? Or tomorrow maybe a really neutral day. We set up a base and then we get a breakdown or a breakout, right? But after kind of this move that we've had today, going to be neutral to bearish going into tomorrow. Definitely not like what we had today, which was, if we break underneath the lows, bearish bias, right? So if we break underneath the lows after this kind of move, I think it's easy to kind of get sucked into a new low and then, see it kind of bounce back against you. So just something to be aware of, bearish bias, but not the best time to be initiating new shorts, okay? So I wouldn't be surprised if we get a bit of a rally tomorrow, but still bias is going to be bearish, okay? All right. Hope you did well today, and we'll be back at it tomorrow. All right. Have a good evening.